Mark Lackey, I wanted to shake your hand. I got a cold. I don't want to give it to you. CHF Capital Markets Executive Vice President, CHF Capital Markets wants you back tomorrow. That's the key. We're talking natural gas, though.
Yeah. Well, it's interesting, Pat. Natural gas price is pretty much in line with what we were anticipating this year in terms of where it's trading. We're within about 3 cents on our year average. We had a range of about 375 to 440. It's interesting, though, if you look at the natural gas stocks, particularly the small ones. I mean, they've got absolutely hammered here in sympathy with oil stocks, and a little bit surprising to me that people aren't necessarily differentiating, particularly among those natural gas stocks that are maybe 85-90% natural gas.
Well, we just had David Pritz on yesterday, and he was looking at copper prices, for instance, and oil prices collapsing together because they're an economic indicator. Same with natural gas to a degree, except we're coming into the winter. That's the difference.
To a degree. But I would also point out, Pat, and the point I want to make here today, of course, is I've been stressing that I haven't been buying as much in North America because it's $4 an MCF. I kind of like being in China where I get $14 an MCF. And I saw on another network the other day that somebody suggested these lower oil prices will take down the natural gas price in China. That is not true because the natural gas markets and the oil markets really don't compete in China. And the Chinese are trying to increase the amount of natural gas they've got from 2% up to about 9% in the next 3-4 years. So we see a tripling in demand of natural gas in China. They're trying to get cleaner air. And one of the ways to do it is to obviously go nuclear and go more natural gas. And that's what they're attempting to do.
Okay, what about, do inventories and supply and demand matter in natural gas?
Well, they sure do in North America.
Yeah.
As we've seen, Pat, we saw a drawdown of significance last week, and we're below the 5-year average by about 10%. We're below last year by 9%. So it's one of the reasons why we're holding in here at $4. We've had some pretty cold weather, and the industrial demand in North America hasn't been bad. So I think, again, there are opportunities here because you've been beaten up so badly here in North America. But remember one thing, Pat, tax loss selling doesn't end until December 24th at 1 o'clock. It tends to peak in the next couple weeks, and I ran into 2 brokers coming over to the studio who said they've never seen tax loss selling this year like they've seen since 2000.
Really?
So this is a 15-year high for them. Now, that's only 2 brokers, but they're big players, and they have guys who've taken a lot of money in the banks and have been selling their junior commodity stocks.
Wow, isn't that something? Okay, so then let's get to our picks. Prime Line Energy Holdings.
Right. Well, Pat, this is the point. I like China, and as I've said a number of times on the network, why I think the $14, $15 an MCF price will not change. Oil, you can move all throughout the world. Natural gas, you can't. This is a producer. They're just starting to produce, shipping the gas into China at $14 an MCF. It's just started in the last few months. They've got all their loan agreements in place. And so I see this company probably cash flowing 25 to 30 cents next year.
Sitting at 50 cents. So
that's right.
Wow.
So we're trading about 2 times cash flow. The analysts that follow it, Pat, they have the $1.30 target for next year. I think that's fair. It might be a bit conservative, but clearly in a good market, this stock would be a lot higher. Now, I have to say the stock's held up in the last few weeks where a lot of other stocks haven't. So the market has not been selling it off, but I think in a better market, this stock would have been a lot higher because people were waiting to see production and wait until they see, say, the quarterly results in February. I think they're going to be quite impressed.
Where are their actual drills? On Chinese land?
Yeah, they're actually offshore China.
Offshore.
They're offshore. They have a huge tract. They've only drilled a small part of it. It's important to recognize CNOOC's their partner. CNOOC has deep pockets. The banks have come in with quite a bit of money as well. So these guys are sitting in pretty good shape. They're well-known Chinese individuals that are obviously well-known to CNOOC, well-known to the government. So these situations look very positive to me, Pat. I mean, if I was to play devil's advocate, what could go wrong? I'm not quite sure. I mean, they're shipping the gas. We've got these guaranteed contracts. Looks like a no-brainer to me in terms of, obviously, I'd like to see a better junior market. That would help. But I think that this is really a good opportunity. And I have to say, I mean, I got quite a significant position myself from a disclosure viewpoint.
Okay, Greenfield Petroleum.
Yeah. Now, Greenfield, Pat, is in Azerbaijan. So with all the problems that have existed recently, particularly the Ukraine and Russia, some people say to me, Mark, Azerbaijan.
Yeah.
I have to point out, though, Pat, that if my days in the oil business and even the way I view the world today, I still view Azerbaijan as a safer place to do business than a lot of other jurisdictions. Now, I would put it in probably the top 30%. So it's a very pro-oil and gas situation, good tax structure. They get along well with the Russians, so it's not an issue. And their gas does get shipped into Europe. What's happened to this stock, as you can see, this has been pretty typical of the tax loss selling where stocks are down 40, 50, 60% in the last month. It's across the board. Now, this is not a North American play. European prices are higher. They are 30% oil. I understand why people would be concerned about that aspect, but the gas part of it is quite strong. So again, I'm going to look at this stock and say to myself, when I see the tax loss selling's over, it's certainly one that's come up in my model. It's interesting, Pat, I've had some stocks come up in my model when prices have actually gone down in oil because the stocks have gone down so much, particularly the juniors and mid-caps.
Right.
I can see the big oil companies still have some downside potential, but the juniors and the mid-caps have gone down so much, they've actually come up in my model because they're trading as if oil's at 50. Now, not saying it couldn't go there for a short time period, oil at 50, it's possible, but right now, I'd say a lot of juniors are undervalued. I put this one in that category, but I do point out to people, there's 2.5 more weeks of tax loss selling.
Yeah, good point, well made. Now, you talked about Russia. Russia's got a gas deal with China.
That's right.
Right now. Where is Azerbaijan in terms of China?
Well, they tend to ship their gas, admittedly, into Europe primarily. But, you know, the discussions, I'm sure, have also been going on because China is looking for every possible pipeline opportunity. So you're right, Pat. There has been some discussions between Azerbaijan and China. I mean, Azerbaijan wants to be careful not to be seen as trying to, substitute the Russians, because they're already doing some of that in Europe. And then, of course, with the discussion today where the pipeline issue into Europe seems to be delayed.
It's going to Turkey.
Right. I would suggest that Azerbaijan has even more opportunities into Europe. But the Chinese aspect is certainly there because, as we know, the Chinese demand is well outstripping its supply. And we should point out the Russian gas doesn't get into China until the end of 2018. So you've got a 4-year window here going into China where I think you're going to continue to have very high prices.
Wow, okay. And the Bri-Chem Corporation.
Right, we've mentioned Bri-Chem before, Pat, and in the past this was a company that had a steel pipe division and a liquids division.
Right.
They sold the steel pipe division recently, and their last set of earnings were up 52%. So I think being in the liquids business, Pat, is extremely positive. The stock has held in pretty well here considering how their competitors in the oil service and gas service sector have gotten absolutely hammered. They've gone basically sideways since I've put them on. But I think that had this been a good market, obviously, with the increased earnings and the fact that they're in the liquids business, which is still growing in spite of weaker oil prices, and they're well positioned across the United States and Canada, and they just came up with another acquisition that I like. So company's growing, good management team, and I think that, watch where this stock goes in a somewhat better market.
Well, you make an interesting point. Tax loss selling is interesting because you sell off your losers and you keep your winners.
That's
Would you
right.
consider that one of your winners?
Well, I would. Now, somebody who might have bought this stock earlier in the year at, say, 175 or 160, that's not much of a tax loss, but we're finding some people are selling, Pat, to take any kind of tax loss. I don't necessarily agree with that, and I know personally I once had a tax loss that backfired on me because I didn't buy the stock back in 30 days, which you can't do anyway.
Right.
You have to wait under the CRA rules. I saw the stock move. I said, well, I'll wait on this, and of course it turned out to be one of the best performers on the TSE that year. So you got to be careful. I don't tax loss sell anymore. It's okay strategy for people that want to do it, but I think recognize you got to wait 30 days, and in some cases, if you sell some things here, you may be making a mistake.
Yeah, you're out for a tenth of the whole year.
That's right. That's right.
Missed the markets entirely. Mark, great to see you.
It's great to be here, Pat.
Mark Lackey, CHF Capital Markets Executive VP. Coming up, Lisa